Well, there ain't no cost of living crisis at the Commonwealth Bank of Australia, not on your Nelly. They are now making $10 billion in profit a year. Not revenue, not income, profit. It was a superb result from the Commonwealth Bank, but there was a lot of hand-wringing in the AFR, the National Financial Daily. Why would there be hand-wringing at this stunning result? CBA will be hoping it's off the front pages within 24 hours. There was more than one story, 3 or 4 stories, just fretting a little bit that this profit was so good that it was too big. We're not talking about the Communist Manifesto here, we're talking about the AFR. I mean, I started there, my first front page as a journalist back in the day, prehistoric times, was on the AFR, writing about Paul Keating's privatisation and the gravy train of bankers and brokers and all the money they were making out of the float, out of the privatisation of the CBA. But here they are. So what's the catch? Well, the catch is, of course, there is a cost of living crisis. People are struggling to pay their mortgages in Middle Australia, and the CBA is making incredible profits, as are all the big banks. Even Suncorp, the also-ran of the banks, made $1 billion profit. Here's what they had to say about Suncorp. How much profit is too much? About Suncorp. How much profit is too much? They made $1 billion. That was the tricky question facing Suncorp CEO Steve Johnson on Wednesday as the insurer posted an 89% rise in net profit for the December half to $1.1 billion. So they've got insurance as well. And as we know, insurance is a complete black box and we're all being ripped off. But they're the second-tier bank, which bizarrely the government allowed to be taken over by another one of the big four, ANZ. I mean, somehow they figure that reducing the number of players from 5 to 4 will help competition in the banking sector. It won't, but too late now. It's been done. But the CBA, now what is going on with the CBA? Well, here it is. The AFR is saying the one number that they left out in their presentation yesterday when they handed down their $5.1 billion profit was at more than $165 a share, up another $3.07 a share on Wednesday. This is the most expensive bank in the developed world. In other words, its valuation on the share market is so high that people are prepared to pay incredible amounts compared to all the other banks in the world for the CBA. The story goes on. UBS analyst John Story started the day by pointing out CBA was trading at 3.5 times book value and 26.3 times 2-year forward earnings. So what's going on? What's all this fretting about this incredible profit? Surely it's great that companies make huge profits. Well, the one thing that the AFR and all the rest of the mainstream media left out of their coverage was this. You'll find it on the Reserve Bank of Australia website. It's called the Committed Liquidity Facility. No other businesses enjoy this except for our licensed banks. The Committed Liquidity Facility, we once called it, when newspaper land, we called it the bailout fund. They hated that. They said it's not a bailout fund, but it is effectively a bailout fund. The Reserve Bank's Committed Liquidity Facility was used from 2015 to 2022 to enhance the resilience of the banking system in times of liquidity stress. In other words, if you get into a bit of trouble, don't you worry about a thing. The good old taxpayer, just as they did with the 80 billion JobKeeper handouts during COVID, the good old taxpayer will be there for you. This was something that was brought in during the GFC. So if you're a shop or a restaurant, if you're any business in Australia, you haven't got the government standing behind you, but if you're a bank, you do. They have taken on so generously the risk of these private companies. It's called moral hazard. It all came about in the GFC, of course, when basically, Wall Street was bailed out with the mother of all bailouts. And during that time, of course, our banks, including Macquarie, who were going to hit the wall, they all put their hands out, and we gave them, thanks to our elected officials, a deposit guarantee and a bond guarantee so they could issue bonds with the backing of the state of the Commonwealth, their funding was assured. They didn't have to do it from deposits. They'd go and raise money like they do for the mortgage market, selling 3-year bonds overseas. So the point is this: like no other businesses in the land, thanks to the committed liquidity facility, not the bailout fund, this bank has produced a stunning profit. And it's done it actually, if you look through the result, it's done it by, as the AFR points out, by eschewing the mortgage brokers, the middlemen, and just going straight through its branch system, so it saves 20 or 30% per fees per loan by doing that. It's focused on technology too, so it is by far the dominant bank in Australia, but all underpinned, all the banks, by the government. Now, that's the one thing we've got to remember in this whole thing when there's a debate about moral hazard and the cherished position of our big banks in society, while the rest of us are doing it tough. CBA is absolutely rolling in it. Please like, share and comment. Hit the bell. Subscribe. Doesn't cost you anything. You can join us on Patreon if you want to chip in, but if you subscribe, help us get through 100,000. We need as much support as possible at the moment. I think they only bother you with a notification when we do a video, which is a couple of times a week. So help us out. Thank you.